Habakkuk chapter 3, verse 19. God, the Lord, is my strength. He makes my feet like the deer's. He makes me tread on my high places. Habakkuk chapter 3, verse 19. God, the Lord, is my strength. He makes my feet like the deer's. He makes me tread on my high places. To the choir master, with stringed instruments. Deuteronomy chapter 20, verse 4. For the Lord your God is he who goes with you to fight for you against your enemies, to give you the victory. Isaiah chapter 40, verse 29. He gives power to the faint, and to him who has no might he increases strength. Isaiah chapter 12, verse 2. Behold, God is my salvation. I will trust and will not be afraid. For the Lord God is my strength and my song, and he has become my salvation.
Yo, good morning, everybody. Hopefully, you guys are doing fantastic today. I'm feeling extra generous today. So, today's call is going to be potentially longer than it normally is. We're going to talk about towards the end, right? Well, it kind of depends on what you guys really want to do at the end. But once we get through these resources here, okay, let me check something real quick. Okay. So yeah, once we get through the initial weekly prep, okay, which is also today going to include, because it's the start of the new month essentially, we may talk about COT. Kind of depends on how I'm feeling. Um, I think we probably should, because again, every month you could look at COT, get a feel for what it's doing overall. It's something that I do. It helps us fundamentally stay on track with what the overall market sentiment is. But aside from that, we're going to also do our weekly prep. This is something, or the liquidity mapping. Sorry about that. This is something that we do every single week. We obviously do it every single day as well, because we do want to make sure that we know what liquidity is important. I mean, I think I do a pretty good job of laying out all the significantly important things on these Sunday calls. But then again, there's something that you can do and references that you could use every single day, every session even. Okay. So hopefully you guys are ready for a longer call. It's going to be a master class. You'll walk away from this call with much, much more of an understanding of how everything kind of fits together. And I hope that if you guys have questions, you feel comfortable asking, because I will answer any question, excuse me, any question you guys have. Because again, that's my whole purpose of even being on social media, is to help you out. It's not to hear myself talk. It's literally to get as many people as I can over the finish line in terms of development, so then they can walk on their own, right? So in today's call, we have a lot to discuss. Like I said, we're going to go through this prep situation that we pretty much do every single week. We'll talk about the liquidity mapping protocol that I use. I have this resource here. You could screenshot it here, but I have this in every single week for both communities, right? The free and the paid group. So just definitely take this, screenshot it, and just read what it says, right? At the beginning of every week, you want to check what's happened from the previous week. Keep tabs on all the liquidity levels shown below, right? Which is what I call liquidity mapping. They're very particular. Okay, that it's not random pools of liquidity. Okay, it's things that are used every single day, either as counterparty liquidity or target liquidity. For example, London's high and London's low, right? If you're trying to go bullish and London's low has not been swept going into New York session, many times, especially if London was slow, New York is going to wipe London's low so then it can pair it with both London's high and the previous day's high, right? Depending on if those are available up above price. So that in terms of that way of doing things, way of looking at things, um, price uses these other specific levels as well to do that very thing. Okay, so there's counterparty and there's targeting, right? Because there has to be a counterparty to every move. And again, this liquidity list shows you what's most important when it comes to order pairing, in particular. So then, whenever you see one level taken, you could justify that level reversing with the higher time frame level that you're aiming at, right? And of course, we start from the weekly, monthly, quarterly perspective to get our narrative. So if all of that stuff can also align with, say, a London low being swept in New York to then target previous day's high or London's high, you have a barn burner way of looking at things. It could also be previous day's low looking to target previous week's high, or previous week's high looking to target previous month's low. Okay, so this is order pairing context and perspective that you want to have while you note these different pools of liquidity. And I hope that just that statement there kind of shows you the power in understanding where these levels at and why they're so important to be focused on, whether it's from the quarterly to the 1 minute chart. There's always something that you can use as counterparty and actual targeting. Okay. But again, this call is going to be very deep. So hopefully you guys are prepared for that. Okay. So just to jump into, well, actually, let's get started with this, the liquidity mapping. So whenever you hear me say liquidity mapping, okay, I'm referring to very particular things. Again, I give you guys a cheat sheet list. I try to make it as easy as possible because many times I get a question of like, oh, well, what liquidity is significant, right? And it's like, I have liquidity here for you to pay attention to. And there's obviously hourly highs and lows, 4-hour highs and lows, 30-minute, 15-minute highs and lows that you can add to this. But in a nutshell, these are the significant levels from the higher time frame references, right? To keep it very simple, previous month high and low, week high and low, day high and low, quarterly high and lows, and then you can also add obviously 4-hour. But once you get down into like the 1 hour and below, you start now getting into more lower time frame references. Okay, but those are the significant levels you want to be paying attention to when it comes to liquidity, okay, from that higher time frame. And then as you see here, higher time frame PD arrays that are in close proximity to where price is currently at. You guys see me talk about this every week. I'm just kind of defining it a little bit sharper, so then you guys can have something to both screenshot and refer to as a cheat sheet, but also kind of just try to drive the point home even further when it comes to liquidity mapping. And then, of course, you got lower time frame references, which is London high, London low, basically session highs and lows, previous AM and PM session high and low, plus lunchtime, right, from the previous day or days, right, depending on what's going on. You got for Monday's trading, you always want to keep tabs on Friday's high and low because Friday's high and low is the most near-term liquidity when Sunday's candle opens, right? Many times it opens up inside Friday's range, right? And a lot of times Friday's high and low can also, in many cases, be used as counterparty liquidity for, say, a short or a buy, right? In the NASDAQ. Like Friday's high might get swept on Monday or Tuesday, and then all of a sudden that was the liquidity that was used because maybe it was coupled with like a PD array on that higher time frame or something else along that line, right? So again, Monday's trading, you want to keep tabs on Friday's high and low for that reason. It's very significant, right? That's why it's on this list. The first hour of the open during New York New York's high and low that's created in that first 30 minutes is very helpful in terms of a POI. It could be the first hour's range. Many times, though, the first 30 minutes range, because that's the opening range, the high and low that's created there, like if it dropped lower and it left equal highs above, and we're expecting it to go higher in that first hour, first 2 hours. If it drops down lower, hits a PD array, and then starts to rally up aggressively because it's bullish, say you're aiming for a previous day's high, that initial high that's created from that first 30 minutes is a reference point that you want to note. So again, the first hour or first 30 minutes of the opening range, the high and low that's created, once price is outside of that time window, those levels become a target. Or, like we just discussed, they could be used as counterparty as well, right? So like the low could be swept to then try to take out the high as it's looking to reach for, say, London's high, previous day's high, so on and so forth. And then of course you got the first 30 minutes, first presented fair value gap, right? Within that 6:30 time, 9:30 Eastern. Very significant, as you guys can, understand hopefully at this point. Many times that could be used as an entry tactic, an entry model. I've showcased that a lot as well. It's kind of beyond the scope of what I'm trying to describe here, though. The new week opening gap, new day opening gap, regular trading hours gaps. These things are significant when it comes to liquidity, drawn liquidity, especially if it's widely open and nothing's been offered in that area. They could be used as magnets. You guys see, we use them for intraday trading, right? So like the last 5 days of regular trading hours. But you guys have also been very fortunate enough to have a, person out here showing you that even if it's 3 months down the line, even if it's 2 months down the line, even if it was from 7 months ago, 8 months ago, 4 months ago, if there's a regular trading hours gap that in the context of the higher time frame direction, say we're bullish on the daily chart, if there's a regular trading hours gap that's say above us from say October of last year, right? We actually used October's regular trading hours gap in January to target because price went lower and then went higher in the NASDAQ. But even from the last couple of months, if it's clearly an open regular trading hours gap and it fits the narrative you're looking at, say it hits a bullish PD array and then starts to rally, right, going into a new quarter or whatever the scenario may be that leads you to believe it's going to be bullish, that regular trading hours gap that's widely open, that hasn't been tapped into, is going to be magnetized as a drawn liquidity, very reliable drawn liquidity. And if you go back to January, you'll remember I call the regular trading hours gap that was below, which it gravitated to. And then once it hit that regular trading hours gap, once it hit that quarterly fair value gap from January, we were then able to pick the low of the year, and then price ran up to the further buy side regular trading hours gap. So we did a dance in between both price points live publicly. I laid it out very clearly. And we use things from, a while ago. So again, like I said, that is referring to new week opening gaps, regular trading hours gaps, and new day opening gaps, and some of the functionality and how you can use them in your analysis for bias. Intraday, you honestly only need the last week, in my opinion, of regular trading hours gaps, new day opening gaps, and new week opening gaps. Obviously, it's going to be important that you know where these levels are at as price prints, because once it revisits those levels again, it's significant, right? Price is going to always refer to them. They never get exhausted. There's never a stale level like some of these people on social media like to claim. That's nonsense, right? The algorithm refers to these levels constantly when it's in close proximity, right? So, and again, one more thing I can say is the fact that every single hour of every single day, okay, listen to me clearly. Every single hour of every single day, okay, has a first presented fair value gap for every single hour. Obviously, some are going to be more significant than others. Like the New York Open, the first presented fair value gap from that point on can be used throughout the whole entire day. But again, every hourly candle has a power 3, in its own range. Okay. So you can use these first presented fair value gaps after the open of every hour as further building blocks to continue to trade off of and build frameworks off of, right? Say you're like a micro scalper, right? This is something that you can use every hour. You don't have to be a micro scalper to use this because, again, these are reference points that are significant for you to observe and use as further context. Okay. So, again, hopefully this stuff makes sense. I did talk about high resistance and low resistance liquidity, I believe last week on a live call. I actually clipped a short video about it. I posted on Instagram and YouTube, so you can go gather that information along with this. But that's another thing that you'd want to add to this understanding that I just described to you. There's a little bit more that I mentioned in here outside of liquidity because this is a weekly prep cheat sheet, I guess you could say. So, like I always tell you guys in video format every single week, when we first start a week, we always got to think weekly power three. When we start a month, we always got to think monthly power three. When you start a quarter, you got to think of quarterly power three. Okay. And you can hopefully understand how defining that and being able to observe it from that perspective, like in terms of power three, hopefully you guys can see the power in that. Because if you can understand the phases in price with what's going on, you could then understand what to expect more likely. Um, or more so better than someone else that doesn't think of things in this way and they live on the 1 minute chart or something like that, right? So I hope that that makes sense. Again, every Sunday going into Monday, it's accumulation manipulation for the weekly range. Tuesday, Wednesday has an expectation of setting the high or the low of the week, along with the expansion, like the bigger, larger expansion phase of the weekly range. And then Thursday, Friday, depending on if a liquidity pool's been met, depending on how aggressive it's been prior to that, depending on if a PD array has been tagged into, uh, depending on if there's even like SMT after expansion into a larger level, depending on which day price hits those particular conditions or those points of interest, that's going to determine many times whether Thursday or Friday is going to give you that close or completion or wick of that weekly candle. The same stuff that I just mentioned can be transferred to the monthly chart, to the quarterly chart. Okay. But you just have to break those time intervals down into quarters. All right. So then the first quarter or the first quarter of the time that you're breaking down, say the monthly chart, right? The first week, that first quarter is accumulation manipulation. Second and third, so the middle 2 weeks, which are the best times to trade in a month, those are the expansion, large portions of the weekly range, right? And then the last week, sometimes a little bit before, depending on what's going on, but a good rule of thumb, the last week of every month, like what we're in right now, many times will present you with the opposing view of the monthly range. So it'll give you have an expectation of a potential pullback, monthly wick being formed, the closure being set for the month, especially again if it's hit a level that should reverse price. So again, these things are very important. I'm not sure if you guys have ever. Well, I know a lot of you guys that have been with me for a while have definitely heard this stuff. I talk about it a lot because it's that important. But hopefully, what I just described in terms of how we view the week, a month, a quarter, how we view power three, how we view liquidity, these, little, I guess, like, excuse me, these little notes in here, right? Hopefully these all make sense and you can kind of see where they fit in your process and what you're looking at. I also have mentioned here as well the 20, 40, 60-day method. So you take like current price, map it out 20 to 60 days back and forward. The most important, most dynamic, I guess the most significant way of using the 20, 40, 60-day look back, I like to do my observations from the start of a month. So, like the new month that comes out tomorrow, I'm going to have a line on the open, right? So that first day, and then I cast back 20 candles on the daily chart, 40 candles. Oh, sorry about that. 20 candles, 40 candles, and 60 candles from that first of the month. And I also project it forward as well. And wherever that aligns with, right, say at the 20th day or close to it, when I go say up, right, and there's and it tags like a piece of the price delivery, if there's like equal lows and I'm expecting price to go lower, if it aligns with that 20-day look back, that's going to be a really close near term target that's going to want to target. The 40-day is a more intermediate term view of liquidity being targeted, and then 60 days is more of like a swing trader, right? It's more of a longer term type of draw on liquidity, right? Or assumption. Okay. So that's essentially how you use a 20, 40, 60-day look back in a simplistic way. You don't got to use it every single day. You can, obviously, right? You take it from where price is currently at and then count, uh, 20, 40, 60 candles back. I'm saying candles very intentionally because um, it's not just days, right? You have to count the candles, right? Because there's like the weekends and all that. And sometimes things kind of get separated. Like because Saturday there's no trading, so it skips a day. So sometimes, as I've taught traders this, and even when I first started learning this, I would get kind of thrown off, and the accuracy would kind of be skewed relative to what ICT teaches. But then I just realized that in most of his examples, he's picking the candles. So one candle, two candle, three candle, um, all the way back 20, 40, and 60 day, and 20, 40, 60 days forward. Um, it's just more accurate when you think about it this way. And then when you cast it forward, so looking back is identifying liquidity, right? Where are significant levels that we look at as ICT traders? Where are those levels that align with that 20, 40, 60 day look back, right? What can be derived from that information when it comes to drawing liquidity? But when you cast forward, you're actually looking to see where significant highs or lows will form in price. And if this makes sense to you guys, I want you to actually go into your chart and I want you to take every month, put a line on it and cast it 20 candles forward, 40, 60 candles forward on that daily chart. You can also, from the daily go down to like the 4 hour and whatnot, do the same thing. But keep in mind that daily cast forward and look back. Okay. You don't want to use the lower time frames. You can, but there's different ways of thinking. It's a little bit more advanced, and we're not going to get into that discussion here today. I can at some point, um, but everything's fractal, right? So even this concept, 20, 40, 60-day look back for the days, right? It's fractal. You can drop it down to like the 1 hour, and there's a protocol you could use relative to this, but relative to that intraday lower time frame, more short term idea. Okay. But again, that's outside the scope of this video. So we will talk about that maybe later down the line at some point. If you guys are interested in it. If not, you could just use what I just mentioned. Okay. But yeah, so hopefully look back, cast forward makes sense. Hopefully all these liquidity points that are in this document here, this little screenshot, hopefully you know why they're there. They're all very intentionally placed. Okay. There's nothing here that's random. It's all very intentional. It's stuff that we use every single week. And, it's just part of my process. It helped. This is what I developed to help me understand what liquidities are significant, right? Like, what should I look at every single day and have noted on my chart to refer to in terms of liquidity? Because there's a lot of highs and lows in the market. There's so many things going on. And it's like, okay, well, if there's like 1,000 things I can choose from and I'm new, I need to figure out how to narrow this in. How do I zone in my focus to the things that are actually impactful and significant and that I can use repetitively? And this is what I came up with, right? Relative to all the things that I've learned over the years. So again, hopefully this cheat sheet is helpful. I know it's been helpful to many students. I've gotten a lot of good feedback on it. Helps them narrow down liquidity. Hopefully what I talked about, outside of just like the highs and lows, like 24, 60 day, hopefully that made sense. Hopefully the power of three idea makes sense. We talk about that every week. And of course, last week I talked about high resistance and low resistance. So hopefully, given that little piece of that call made sense. So now you also have an arsenal of understanding when it comes to how do I identify high resistance and low resistance, and what are the characteristics that I should expect. Okay, so again, this is liquidity. Okay, there's obviously more depths that you can go, but again, understanding what I just said and what I said last week about high resistance and low resistance, hopefully that stuff is easy enough to understand. Because I'm telling you right now, it's super super important, as I'm sure you guys are aware, to understand how to navigate and identify liquidity and the characteristics relevant to whatever liquidity that you're looking at. Okay. Freaking allergies, summer, it's getting crazy out here. Okay. So, yeah, that is essentially all I have to say about liquidity mapping and some of those topics. So, now with that out of the way, let's actually go pull this back up again. So, again, after we get through all of this, I will be opening up the floor to to talking about other topics. I also have some other topics I have on this piece of paper. Um, some of the ideas that I want to potentially talk about: other PD arrays and how they fit inside of price delivery, how you can use PD arrays inside of a price leg to be able to build a narrative, okay, while you're in the trade or while you're looking at price, in a particular range. How are you able to then build a narrative with what it is that you're looking at, kind of outside of the bigger picture? How can you, on that lower time frame, justify a narrative that's going on simply with that smaller perspective of price delivery, utilizing PD arrays that are present inside of a price leg? Okay. So that's a topic that, if you guys want to talk about that, from breakers, mitigation blocks, order blocks, fair value gaps, any other PD array that you want me to talk about, we can, unless I just don't use it, right? Which I'll tell you. Um, and then of course risk management. We could talk about risk management as well, trade management, and whatever else you guys want to talk about. So yeah, those are some things that we'll get to later. But again, hopefully what we just talked about makes sense. And any of these topics as well, you guys can let me know. We can talk about. Okay. But I'm here to pour into you guys a lot today. I feel like it's worthy. It's worth it. I've gotten a lot of good feedback, lots of love and support, and it's encouraging, right? So I want to try to help you guys as much as I can today, as I normally do, right? But today I'm just extra interested in seeing how far I could take you guys. Okay. So yeah, first we're going to talk about risk on, risk off as always. We might talk about COT, like I said, uh, the risk sentiment in the markets, with the war and all that. We have lots of things going on, so the news is going to be pretty on fire because of the new Fed chair. There's going to be drastic measures that take place very soon, and I think it's going to be aggressive economic growth stimulus that's going to be taking place. There's a ton of money printing going on. So that quantitative easing stimulates the economy, right? So, and as a result, inflation has an impact. Dollar loses value, but because we're trading the indices and have other assets, it should appreciate these things in value. So that, in terms of sentiment and just overall market condition, is definitely worth paying attention to, because it's gonna have an impact, and we'll constantly talk about it. So hopefully it makes sense. Then of course bonds, yields. We'll talk about, like I said, any of these topics you want to talk about. All this stuff is referenced. Then we got the EURUSD indices, and then metals, and we could look at crypto too, because I've seen a lot of stuff happening to assets that I have been interested in for literally almost 10 years now. Okay, like XRP and XLM, for example. And we could break that chart down as well. If you guys have any stocks you want me to look at, I'm starting to, uh, in addition to futures trading, I'm going to also be looking to compound by um, taking weekly, monthly, quarterly options trades. So I have a process that I've had for years for my long term portfolio to break down stocks. But this is going to be an extra added thing that I'm adding to my private group. We're going to we're going to have special attention, at least for the next 6 months, as everybody gets familiar with options, because options, the action of options is obviously a little bit new to me. I've never really traded options, but I call the markets good enough. And options just has a couple other things you got to pay attention to, like time decay and a couple other things. So there's going to be a section for that as well, and I may talk about it more on YouTube as well. So I think that this is going to be a new chapter, elevated for this community, just another weapon in the arsenal that we're going to use for long-term compounding and trying to build wealth and instill in you guys tools that I feel can be pretty beneficial if you decide that you want to expand your horizons with your skill set. Because as a trader, as a day trader, as an ICT trader, we're much more than just a day trader. We could be swing traders, position traders, long-term portfolio managers. We could be options traders. We could be crypto traders. We could do anything we want in the investing space because we can determine where price is going to go and we understand what drives the market at a high level and we prove it, right? So it's not just like a fairy tale that's made up. It's every so often, right? Like this stuff happens all the time. The same in every asset. Some assets obviously have different fundamental factors you got to pay attention to if you want to trade those, like stocks, for example. Not every stock is impacted by the same stuff, just like how you know not every indice is impacted by the same stuff. There's different sectors and whatnot. They follow each other close, but some stuff may impact, say, the S&P more than it affects the Dow, or vice versa, right? So it's the same thing if you're looking at like Apple and something else that has to do with like space or something, right? They're not going to be affected by the same stuff. Some stuff may overlap, but again, these companies are ran by different CEOs. They got different things going on. So there's a whole world that we're going to get into. And again, I've already had for years a stock breakdown system for both long term and growth stocks, or dividend paying stocks, like that realm of income generation to growth, right? And I have a system that I've utilized for years, and that's another thing that I've shown me beating the market. Um, that's documented too, right? I don't mention it a lot. It's in my private group, but on the back end, we got long term plans as well. I talk about it sometimes with you guys, but I'm a well rounded investor, not just a trader. And it's all thanks to ICT and this skill set that I try to share with you and some of the wisdom I've gained over the years. So yeah, with that out of the way, it's just something to think of if you guys are interested in that realm of things. If not, futures is obviously the main course meal. So um, yeah, just some things that we're looking forward to. So again, with that being said, let's begin our breakdown for today's weekly prep call. So yeah, the news this week, as I mentioned, right, is going to be pretty chaotic. We have NFP, we have Fed Chair, well, FOMC member Powell. Wow, he's already talking. Like, dude, just right off into the sunset, bro. Like, you need to relax. So apparently he's going to talk today. That's going to be interesting. See what he has to say. So we'll pay attention to that. Sunday, Monday is accumulation manipulation. Tuesday, Wednesday, expansion. Saying the higher the low of the week. Thursday, Friday, depending on which day, is fulfilling a PD array or tagging a liquidity pool. Uh, that in that moment, whichever day hits a significant level, that could be expected for TGIF potentially, just to simply cap the weekly range. So that's the rough perspective in terms of what we're going to be identifying here, or just anticipating throughout the week. But again, we have news on Monday, so it's a jam-packed week. We're gonna have a lot of stuff happening. It's very ideal that you guys pull back after Wednesday's trading, well, Tuesday's close of the day at PM session. You want to look at the last couple of days as very low probability. We have no clue what the hell is going to happen. We have lots of conversations happening with the Fed, FOMC, NFP, monetary policy, global monetary policy. There's so much stuff happening. So this stuff is going to be extra vicious, okay, when it comes to manipulation. Um, so we'll see how everything goes, right? But it's not a week to mess around and find out, right? You don't want to do that. You want to be very responsible and you want to grow like a normal individual, a normal trader that's disciplined, that is running a business, not a gambler who's similar to a drug addict and has to be in a trade every 5 minutes, right? Obviously, only one of those two perspectives can be successful long term. One is going to be ruined at all times, right? So, choose wisely when you decide. But again, my opinion, right? My encouragement is to focus mainly on Monday and Tuesday, which is what we're going to do this week. I will obviously be looking at trades, looking at the market. I don't take days off, right? I'm always plugged into what the market's doing, what's happening in the world. So we will be looking to see and probably will identify moves over in my private group when we go live on Wednesday and tomorrow, Monday. So you guys will get to learn all about what's going to happen at that time. We'll see what takes place. The news is at 5:15 on Wednesday, and then we have 7 a.m. So what I would expect is the first move is going to be fake. Okay, like it's split. So whenever there's a split news event, when it's like that, you got to make sure that you're cautious of the fact that this may open up slow, and then 7 a.m. may come and then start to really open up and give it the opportunity to then run aggressively. This is what they like to do. If you were smart money, you'd do the same thing. Have the biggest news events start early, not really do too much that's aggressive, do a little bit, but then later on, really run it up um, and cause the most pain after people get fooled by the slow or lackluster potential delivery that may take place. Okay. So that is some of the opinions of the day, couple of days, right? Of course, we got NFP on Friday and the unemployment claims on Thursday. So Thursday might be a reasonable day to trade. It is a day before NFP, so we just kind of got to feel it out and see what it's going to do. Because it is also the start of a new month, we're also in the summer months. You got to be cautious about the chance of slow delivery, but because Trump's president and all this stuff is super, super active on the global stage and monetary policy stage, I think that we may have a pretty exciting summer. We'll see, right? Even if it's consolidated or if it's expansive, it doesn't matter, right? We always are able to then internalize something and find something to do if we feel the need to do so. Every single day, there's something to trade. Every single day, like I've been teaching recently, there's a market maker model framework. If you can identify that market maker model framework, you could then engage in one of the phases that you're comfortable with engaging, which again, I have been heavily, heavily smashing over the years, but even more so in the last couple of months because I've noticed that many people have pulled their attention away or haven't given it the attention it deserves when it comes to the market maker model theory. Um, it's something that you should not discount, right? If you're new, obviously there's other things that you want to learn first, like the 2022 model, ICT's 2016 fundamentals, right? But again, once you get through those pieces of content, which are not, it shouldn't take you too long, but once you get through those pieces of content, you want to make sure that you're really honing in on these things here, okay? But in particular, market maker models. Okay, market maker models and Power of Three fit inside of one another too. So we could talk about that a little bit further at some point, but I just wanted to throw that in there. So keep this stuff in mind. But yeah, so that's our outlook for the news. We'll see what happens. We've characterized each day's role in the weekly range. So we'll try to see if we can hold each day to account when it comes to those characteristics and what's to be expected. And then if there's anything that we have to adjust to, obviously we will. But yeah, do you guys have any questions about anything that we've talked about so far before we get into the analysis portion of things? Okay. Just want to make sure that everyone is clear on what to do or what was discussed. Mike, I'm glad you're excited, brother. Mike, you know the vibes, bro. You started with me on YouTube. You know the vibes, bro. You join the private group and you see that what I do here on YouTube every single day is the same stuff that's done, including what unfolds, right? Like we call the market accurately um, on Sundays and Tuesdays, but every single day the process doesn't change. And many times the results are very accurate. So with that being the case, I don't see why we would close the door on something like options. It does have a little bit of a discrepancy, right? There's other things instead of price and direction, right, or time and direction. Options has time, direction, strike price, like 5 or 6 different other things as well. The multiplier, the premium, right? There's just many things. Buying calls or puts, shorting, right? The differences. I mean, it's wild. Mike said, "Can you explain why ICT traders are the best traders?" Well, it's because we answer the important questions. The why. Why should price run up? Not just because some indicator showed us late data based on something that already happened. How does what already happened help us anticipate what's going to happen, right? With high accuracy, right? That logically makes sense in the chart when you study it. And why, right? Why should price do or not do something? And those questions are answered as ICT traders. And I think that's why, in my opinion, that's why we're some of the best, right? There's a lot of traders also, obviously, that trade outside of our concepts, but that are successful, wildly successful. But again, they're just good money managers, And if you add being a good money manager, plus the fact that ICT concepts are so thorough and give you the why behind everything, you can imagine the possible upside is pretty wild, right? I mean, you guys see it, bro. People, there's lots of public, really good ICT traders. I mean, you see what we do, right? You see, I'm not really one that leads with like, "Hey, look at my bank account," because I don't want to pull signal junkies to my thing and have the expectation that just because I make $5,000 or $10,000 a month, that you all of a sudden, because you're learning, should be able to do that right away, right? And I want you guys to be here to get the concepts, to understand what the why is, right? Internalize how that is discovered, and focus more so on process rather than, what does Christian drive, right? What fancy restaurants does he get to go out to, right? So, none of that matters, right? What matters is what I'm talking about on the chart. Does it work out? Does it play out? Is there validity, and how can you use it, right? And then go in and start to use it and, better your life with it. That's what truly matters. And of course, I throw it out there sometimes, like the big days that I have. I do it a couple times a year, but again, I don't lead with that. And the reason being is because I end up having good students like you guys. There may be a small amount of people that follow, but guess what? That small amount of people have a high likelihood of seeing success, and clarity in the market. And then you are responsible for making yourself a success with it. I can't promise that, but I give you the tools, um, and perspective and realistic things that are obtainable. And that quote unquote realistic word is going to be different for everybody, right? Um, is $100,000 reasonable per month for you? Is it realistic? Is it a reasonable goal right now with where you're at, with where your skill set's at, with where you're at monetarily? Maybe not, right? But 500 a week might be, 500 a month might be for right now, right? And once you cross those bridges, there's no reason why you can't get to even further heights if you just continue to do things properly, right? But again, none of that comes from what is Christian driving today, right? Or how much money did he make? Even though you can't spend that money, right? People still want to focus on those types of things. And it's like, I show it, okay, multiple times. But again, I don't want the focus to be there because you can't spend my money. You're not going to drive my car. You're not going to do any of those things like ICT says. So I let the chart speak, and hopefully it speaks loud enough. I know it does for many of you that do take this serious, and that's my audience. I'm not going to be everyone's cup of tea, and that's totally fine. And but those of you who do think or see me as uh, a reliable resource, you guys see the results. Like Mike, for example, like Tony, and many like Carlos as well, and many of the other private group students that have worked with me, both but both free and private. You guys get a tremendous amount of value. So, uh, yo, what's up? What's up, Matthew, Maddie? All right, so let me check my paper real quick. Okay. All right, so now that we're done with the news, got some of the other things I wanted to talk about out of the way. Let's get into the bonds and yields now. So we always start from the quarterly perspective whenever we start a new month. So we're going to want to lock in this perspective. Okay, let's make that bigger. Okay. So when we're looking at the yield of the bonds, okay, the bonds, as you guys know, have a heavy impact on what the foreign currencies are going to do and what the indices are going to do. Okay. So that's why we start here. So when we take a look at this quarterly perspective, because we're starting here first of all because it's a higher time frame, but especially when price is going into a new month. Okay, you got to know what's happening at the start of a new month, because Power 3 is going to unfold. So tomorrow we're going to plot the open price of June, and we're going to go throughout the month referring to the monthly Power 3. This is a study that I want you all, every single one of you, listen to me, okay? Every one of you, every single month, you want to set a line at that open price. And then at the end of every single month, you want to observe what that candle did and think of things in the lens of Power 3. So the open price happened here for this month, right? So this monthly candle opened here. What did it do? Price opened up, rallied up above the open price, came into a wick here, respected that wick, lower 25%, order block right here as well. And then price rejected and got back down below the open price after showing proof that it wants to reject this as it looked to target this low right here, okay, which was a previous month's low. Well, last year's low, actually, that was a yearly low. So this month here did a bearish Power 3 to get us down below this previous yearly low, okay? So you could see the same thing happened here, right? This Power 3, it was indecisive, so it would have been a harder month to trade for the bonds. Big sell-off after coming up into this wick here. More so it respected this wick midpoint, 25% level and lower. This wick in here came up into this, so it presented Power 3 there, bullish Power 3 here. Why? Because it took the low here, and every time, for the most part, when price takes out a significant liquidity pool and it closes aggressively above that low, many times the expectation should be that it's going to try to retrace a little bit to some PD array before it sets up another leg, or it may entirely reverse. Okay, so we could see Power 3 is happening on every single monthly candle. So this is why every month from this day forward, if you haven't done this already, you want to start mapping out every month from the lens of a Power 3. And you want to break it down into 4 quarters, the first, second, third, and fourth week, right? First week being accumulation manipulation, which is where the wick formed, right? So the expectation of this wick here was to occur essentially in that first week. Maybe it bled over a little bit into the second week, but nonetheless, set the high, hit a PD array, had a very obvious target down there, right? When it did start to give it up, getting down below this low. So that middle 2 weeks pushed price lower, right? And then the last week is what ended up giving us this wick. As you can see, we're at the end of the month, okay? And what happened? We've come off that low. So if we were to, again, break this down into 4 parts, right? So this would be the first week, second week, third week, fourth week. Again, this is not just unique to this asset. Okay, this is a universal topic. So I know some people don't like to, sit here and listen to me talk about this asset, but first of all, you should. If you don't, you're not going to get the same type of ideas and same conviction and perspective that I share if you're here learning from me. So if you want to take bits and pieces that are significant and remove them because of being lazy, then this is not a place for you. And see ya, right? Because you're just going to get frustrated. But again, this is all universal. Okay. So same thing I'm doing here, we do with the NASDAQ, the dollar, foreign currencies, everything. Okay. It's all the same. So first, second, third, fourth week. Okay. So first week was accumulation and price declined, right? So accumulation, we did see a slight manipulation up here. Price did end up declining aggressively in the second and third week. Second and third week is expansion. The first week you could see accumulation and it manipulated, right? Started to break down, but really gave up the ghost once the second and third week kicked in. Okay, so then we dove down. We had that yearly low there. It continued the move in the second week, or the third week in this month right here. Okay, but we hit a significant PD array, just like how when we talk about TGIF for the week, right? On this monthly perspective, we fulfilled a large higher time frame level, right? It took it, and then what happened? It closed deeply above that low that was taken. Matter of fact, in the same swing, in the same week, price took out this high here, creating a shift. It created a bullish breaker. We talked about the mitigation block that was formed in here as well, right? When it delivered on that lower time frame. I remember this week when we were talking about it. Price came down into it. It was also a bullish order block. Okay, so low, high, failure swing, breaks above that high, comes back down, respects it. So this triggered in a rejection response after we took out significant liquidity. So counterparty liquidity was up here. Let's go back to what I was saying earlier, like call back real quick. So it took this liquidity, dropped down as counterparty to fulfill that level. And then what did they do? They stopped right before that level, creating equal lows, aka low resistance, smashed through it with low resistance, turned around aggressively, and then the rest of the third going into the last week of the month continued this retracement to close off that monthly candle as a big wick on that monthly candle, right? So drop down, purge of liquidity, bearish monthly candle, but all the components tell you a pretty solid story about what took place. Okay. Okay, and then as you can see, it didn't want to really continue. We just closed out the bearish monthly candle right in here. Okay, but each week again has its own phases, right? Accumulation, manipulation, right? So accumulated, manipulated, started to distribute, gave us that secondary one, but because we hit that level, it gave reversal. And this was also approaching the end of the month, right? So it ended up capping the monthly range, keeping this stuff in perspective, okay? So hopefully you guys see this example for the monthly range power 3, how you can break these down. And the open price of the month was here, right? So you draw a line here, okay? Let me move this real quick, kind of give you a visual. I'm a very visual learner, so hopefully this is maybe even more helpful. This is the open price, okay? We see that the monthly, right, accumulation, manipulation, distribution. Assume that instead of these being weeks, assume that this was London session, right? New York session, right? Goes into a significant higher time frame PD right towards the end of the day. Price tags it and then gives you the opposite end of the daily range, creating a reversal, going back into what happened in London and New York, right? And then closing out here off that low, but still below that open price, creating a bearish candle. That's a daily perspective you could think of if this was not a 4-hour, right? And these were not weeks. If this was just a daily range and this was the daily open instead of the monthly open, right? It's all the same. It's just the time intervals and how you look at it has to be adjusted. Okay. Yo, what's up, Alvinity? Glad to see you hopped on, brother. So again, hopefully this perspective makes sense, right? It's a very high level of understanding power three, and daily, weekly, monthly, quarterly ranges, right? Um, Same thing can happen on a 1 hour chart. You just break it down into fours for the 1 hour power three. So you could see how far you could take this depending on what you want to do with it. But you don't have to go down super low and deal with it on that lower time frame. But all the concepts are the same. But I hope this makes sense to you guys before we move on to further analysis on this. Candle was a bearish candle close because it closed below the 50%. No, the candle is a bearish close because it closed below the open price of that monthly candle. Okay, this is the open price of the monthly bearish candle for the monthly range, right? And because it closes below, that prints you a bearish candle. Same thing with any of these candles, right? We close below the open of this candle, it's a bearish candle. Close below the open, it's a bearish candle. Same thing here. Close below the open price, it's a bearish candle, right? Don't overthink it, okay? But yeah, so again, hopefully all this stuff makes sense. Is there any other questions? Appreciate the question, Maddie. Do you guys have any other questions about this topic here? About the monthly power three, or just a concept that could then be translated to any range that you're looking at. It could be 1 hour, whatever the case may be. Good question, Alvinity. These are the symbols. I use the continuous contracts. I don't trade it, so I could really care less. I'm just looking for narrative, right? What is the direction of these assets? Because they affect what my decision making is going to be and whether I see that price is symmetrical or not, which again is a determination behind high probability or low probability, right? So if you think about it, all this liquidity stuff that I've talked about, all of it comes full circle when you start to think about other things outside of it, okay? Power 3 mastery. Yeah, 100%, bro. I have a whole Power 3 boot camp for a reason, right? Because it's that important. This is just a further amplification of how powerful Power 3 can be, and why you need to really, really spend time on these concepts, right? You can't just learn, the basics and I'm on. Like, I'm going to just move on. Like, you want to spend a lot of time, get intimate with Power 3, market maker models, your execution model, get intimate with the PD arrays you like, because all of them could be, they're all fractal. Every single thing that's taught is fractal, from the first presented fair value gap idea to Power 3, right? It's all fractal. You know what I mean? So same with even new week opening gaps. Those are volume imbalances on the higher time frame. So again, you're taking it further than just new week opening gap, regular trading hours gap, new day opening gap on the lower time frame. There's multiple use cases for everything, right? They don't necessarily differ too aggressively, like the new week opening gap example, right? It's just simply perspective that needs to be considered so you can stay in alignment with how to use these things, time frame to time frame. And some stuff is just useful in the lower time frame, depending on what style of trader you are. But again, most of the stuff, I'd say 95% of it is fractal and can be used from time frame to time frame. You just have to understand the role it plays on each time frame, whatever concept it is that you're looking at. Okay, but things like Power 3 are directly fractal. What you do on the 1 minute, right, for the or the 15-minute for like the daily Power 3, it's used for the quarterly, right? It's used for the yearly. I've talked about yearly Power 3. Literally, we called the whole entire yearly range up to this point. If you go back and have been very diligent, spending time with me on these calls, we've literally mapped out the whole entire year Power 3, the first initial phases. We expected bearishness at the start of the year because accumulation manipulation for the first quarter, somewhat part of the second quarter, and then expansion should deliver in the second quarter, March and April, right? We picked that low, right? We talked about it last year, we talked about it this year, and then we've had expansion ever since. Okay. And then, of course, the end of the year, like later into the third quarter, going into the fourth quarter, right? You could then have the opposing end of the yearly range for the yearly power three, right? So the yearly closure of the yearly candle, yearly power three, right? TGIF, but for the year, right? So just another perspective about how important power three is and whatnot. So it's very, very crazy stuff, and many people on YouTube don't talk about it this way because they just don't know what the hell they're talking about. Some people do. Some people I respect, and had admiration for. They do understand it, but I mean, you could tell if someone's just giving you basic information on the back end. You know, most of the time they're not really doing what they say. So, but we really do, and we prove it every week. So again, hopefully you guys have gotten value from all this stuff so far in terms of the power of three. So if we take that understanding, that logic, and look at what price is doing at this moment relative to last week's analysis, we talked about last week how this fair value gap in here, suspension block. So what time frame was it? A suspension block. That's the suspension block. So this 2-day suspension block, we talked about that midpoint. If it was going to give us another leg lower, we would have had to see this fail, leave a part of that open, not ever come back to this piece of the price delivery in there because we got sell side, buy side, and then displacement should have been treated as a level that didn't want to be traded back to if it was going to be bearish. So because prices now closed outside that midpoint, now that it's closed above that midpoint, now that we've inverted that suspension block, we've also seen this order block price traded down into it, closed above that midpoint and displaced away, plus the invalidation of the suspension block being bearish with this rapid movement through it. We've also had this justify as well as an inversion. So my intention, my overall goal is no longer to see if price can get down below unless this low is given up and then we start to break through the midpoint of this suspension block. If that happens, we could get back in line with the bonds going lower. That as a result should have a bearish sentiment spewing over into the other assets like foreign currencies and the indices. But as long as this holds up, as long as this continues to be the way that it is like this, we do have this large wick in here. Okay, so we do have that wick we gotta keep in mind. Okay, so we'll keep that in mind. If we move up to the monthly chart, we have that large wick too. But again, we're coming off this low here. So again, it's going to have to dramatically break down back through this. If it does do that, then again, when we look at this monthly chart, it's a lot less bullish than meets the eye, right? Versus the lower time frame, right? We're seeing early signs on that lower time frame that it may want to keep going. But if this time frame, this monthly perspective, was a 1-minute chart, and this is what we saw, we wouldn't necessarily be too overwhelmingly convinced, right? We'd still have to wait. But what gives it away, in my opinion, that it's more likely that it's not going to want to go lower is the fact that price came down, swept out this low, and we've closed aggressively above that low, similar to what happened here. Dropped down, took that low, and aggressively repriced higher. Right? You also got to keep in mind that we're inside this bullish order block here. Right? This is actually a PD array right here. ICT talks about the indigo PD array. It's a volume imbalance above the order block. Look at that respect right there to that level. This is his indigo PD array. It's a volume imbalance with an order block after a displacement took place like this. So it's a variation of an order block with a volume imbalance together. So both of those coupled together, fused together, create what ICT calls the indigo PD array. Okay, or indigo model. And look at the precision on that, how beautiful that was. It's beautiful, isn't it? But yeah, again, you don't have to use it. It's just something that's there, so I might as well point it out. But because we have this PD array here, you notice the respect, the sensitivity to that level. It could, like I said a second ago, lead to this first sign of bullish price delivery, resulting in a further buy side delivery, especially when it comes to seasonality and all the other factors. Um, we may see this start to push up because there is a, if I'm not mistaken, a bullish seasonal influence. It's the summer months, right? So it's kind of hit or miss whether it's going to be bullish or not. Let's see. Let me see. Seasonality. Just bear with me real quick. Okay, where is it? Okay, seasonality. Oh no. Come on, get it together. Okay, just dollar, gold. Oh, all right, there it is. So let's move this over. March, April, May, June. Yep. Right on cue. Right on cue. So in June, early June, you see that there's all three of these lines agreeing with not only bullishness, but also a seasonal low forming in the summer. So, I mean, we've seen that this huge wick took place as we're going into June. It's not always on the exact day that it shows here that seasonality plays out. It's in close proximity to that time, right? And if you can see the chart agreeing with what's showing here, you're in a very strong year of bullish seasonal influence. Many times, if it's, say, like super overwhelmingly bearish and there's lots of negative news and things are, kind of taking a hit or whatever, the bullish seasonal influences in a bearish higher time frame price delivery are times when price will just simply give you a pretty strong retracement that then continues, if that is what it's going to do, right? If the structural ideas look like it still wants to go lower. But this is something very significant for the bonds, okay? Um, we have a bullish seasonal influence here. All three lines agree not only with the bullish tendency, but also lows forming for this particular time of the year. And wouldn't it be ironic if this low ends up pushing us all the way up here? I hope it does, because that'll further drive home the point to all of you guys that are diligent and spend time here and listen to what I have to say. You guys will see the impact and the severity in terms of effectiveness when it comes to seasonal influences. Again, it's a macro perspective. It's a fundamental tool. It's not an intraday tool. It's a fundamental tool to support intraday tools. Okay. But when you can trade with something like this on the back end, you have amazing, amazing price delivery that you can trust, because fundamentally, the fundamentals are on your side, right? It's just amazing, right? I'm gonna be using this also for a sneak peek. This is gonna be one of the things I use for seasonal influences for whatever stocks I choose to engage options in. So we'll talk about that when the time comes, when I discuss options further with you guys. But yeah, so I wanted to definitely point that out, because that then justifies this huge run here on that daily chart, right? The big rejection here going into June, right? It justifies it with seasonal influence. So because that is the case, we have seasonal influence. Oops, let me sit down real quick. So again, we map this out as a BPR, low, high, lower, low, which, it's great, up to this point. We took out that yearly low there. What is that? Okay, I can actually remove that. So we'll see what it wants to do there. As long as this wick stays intact, we will continue to see if this can go higher. That continues to allow us to trust with high certainty that price in the indices and foreign currencies should continue also to have a pretty rapid movement through to the buy side. Okay, and if we go to seasonals once more, just point something out to you guys real quick. Shit, why did it just fly past it? See, and then when it comes to the NASDAQ seasonal influence, right, you could see that it's pretty solidly agrees. It's a little bit later than the bonds, so the bonds move first. Many times that's what happens. Many times the bonds can also be used as a forward-looking indication or indicator for whatever sentiment you're expecting as price moves forward. If you see the bonds moving higher initially and the NASDAQ and indices are going lower, but you see a bullish order block, right? You got to watch that bullish order block, especially if the bonds are just ripping to the buy side while we've been in a downtrend on the NASDAQ. Many times you could then start to anticipate quarterly shifts using this particular topic, right? This particular tactic and tool. Okay. But again, most people are lazy. They're not going to want to look at this stuff or use this. They think that, A, B, C, D is the only thing that they have to do. But, you know, do the engineers at Apple look at all the basics of coding and become spectacular? No. They look at the depths of how far they could take things to become excellent at what they're doing. And you should have the same perspective, right? And if not, your results will show, right? So you gotta pick one side of the fence or the other, and either professional or not professional, right? Half-ass or full effort, spectacular or mediocre, right? Which one do you want to do? And you got to observe your current study, your current activity in trading, and how you're studying and doing things, and who you're listening to, and really do some reflection on where you're currently truly at, and whether you should be doing more, or uh, for some of you guys, you're already doing enough. You know, but again, only you can answer that question. So I do encourage you to ask that question of yourself. I encourage you to be excellent because that's what I teach here is how to be excellent. As I pursue excellence myself every week, every day. So yeah, hopefully that confluence is pretty interesting to see as well with the Nasdaq seasonal influence. But again, seasonal influence is definitely going to afford us continued buy side delivery interest until something like this was to be violated. Okay, so that is our invalidation. Okay, so got the wick, we got the low, and the suspension block would be getting given up, and we would be respecting this up candle here, these up candles, which is a bearish breaker. You're going to want to have this on your chart, at least noted in some way, because once it gets above that, you could use that as an inverted breaker. And again, it would just be more reason for us to then slide on up to these highs up here. And then eventually, I mean, look at this right here. Oh, dude, with everything that I just described to you, the back end fundamentals, all these different things that I've talked about so far, we have trendline liquidity and beautifully untapped equal highs. I would say that looks pretty likely to be targeted as long as this low stays intact, as long as we continue to invert this level here. I would say there's a high probability that it's going to target that. So that is going to be my objective and my perspective. And we don't have to go much further than that, honestly. Okay. So, yeah, that will just about do it for the bonds and yields. Before we move on, do you guys have any questions? Let me know in the chat. Appreciate y'all for sticking with me and giving me the time to teach you guys the proper way. You guys don't have TikTok brain, clearly. Um, we are in a bullish year. Summer months are used to accumulate. Yeah, we'll see. We'll see. I did share something that ICT talked about before when it comes to Power 3. Maybe I can go find it for the yearly. This was a post that he put in 2016. I believe it was 2016, if I'm not mistaken. Let me see if I can find it real quick. These freaking allergies are literally killing me, bro. Where the hell did I put it? Models I use. Power 3. Yeah, I did. It was literally the last thing I posted right here in the private group. We're in quiet part of the year still. I think this was in the summer. Spring is coming. Markets coming to markets very soon. The year, if you're in a single range, we're in accumulation phase still. Don't blow your equity. For solid days. I wish I would have took a screenshot of the date. This is when it was Twitter. January to April is the yearly accumulation. April to May is manipulation. Ironically, right? April to May, or March, for whatever reason, sets the low of the year. It's done it the last like 4 years straight, which I've proven publicly and called it publicly, talked about it publicly. Then he said May to November is the distribution. So May, we just got over May, right? And it's just flew aggressively after we set that low. Again, it's never going to be perfect every single year, right? Some days it's going to, or some months or years, it's going to be a little bit skewed, but in the general vicinity, just like with Power 3 on the daily perspective, Asia range, we just automatically think accumulation. Is it always the accumulation? No. Sometimes Asia is very quick, right? Sometimes London's very quick, so kind of throws it off. Same thing with the years, right? Same stuff happens. Let me see. Mike said there are two options. We'll be prepared. Yeah, Mike. We're always prepared. The market can't escape what we do, which again we prove every single week, and with high consistency, and hopefully by now you guys are starting to develop a high conviction to what it is that you guys are learning, because it's deserving of it. But again, you have to work for it. You have to earn that. I could teach you anything and everything, but you still have a portion of the journey that has to be earned. When it comes to profitability or consistency, it's going to show whether you have been doing the right things, when it comes to your overall understanding of the market, and the concepts that are being taught. Time does not necessarily equate to profitability. Study itself doesn't equate specifically to profitability. How you're studying, what you're focusing on, self-development, risk management, and your ability to be disciplined, all of those things play heavy roles in you developing as a profitable trader. It's not always time. Time can be deceiving. You could literally learn the wrong things, but still have 10 years of experience and still be a failure. You could learn the right things, but because you don't deal with self-reflection and self-discipline and self-development, and your mindset is all over the place and your risk control sucks, nothing you do in that case, even if you're a library understanding every concept, nothing will work for you. So that's why this isn't just an intellectual thing. You don't have to be very smart, but you do have to be disciplined. You do have to do the right things. You do have to know what it is that you are doing. And if you don't know what you're doing, you got to figure out what it is that you have to improve on, what you need to learn, and then get on the path of doing the right things. Because again, that's the risk in trading. It's probability, So you have to stack those probabilities in your favor, not only by the technicals, but also that inner conversation, that inner work, the stuff that is outside of the chart. Those things still have to be focused on too, in order for you to achieve what it is you're trying to achieve. I've been fortunate enough to have people that reminded me of this stuff, right? Mentors that I invested in to help me, who have so many years of ICT experience. One of my mentors has been with ICT since baby pips, so 2011, well before he was ever even having a mentorship at all, right? So these are some of the things that I've gotten from those types of people, type of perspectives I've gotten from those types of people. So hopefully you guys are able to take that information and also benefit from it as well, perspective wise. But yeah, so again, this is pretty much all the opinions that I have for this asset. So again, with that being said, if you guys don't have any questions, I'm gonna go share this. I'm gonna start taking all the screenshots from these videos and posting them. I haven't been doing a good job of doing that. I think that's kind of lazy. So I'm going to be improving on that. So again, just bear with me. I appreciate it. So yeah, that is for the bonds. Now, if we go over here to the yields, we're going to do the same style of analysis, right? Where does price come from? Well, we've been talking about this perspective, if you remember, and have been diligent and been hanging out with us. We've been talking about how when price gets up into these levels, we called all these levels. We had this level, and this level well in advance down here. Said those are the levels that I'm looking to see price potentially get to. If it's going to want to continue to go up. And then we saw that huge run up, right? We wicked through it, made a rejection block. We got this large wick here, price gapped lower. We talked about this fair value gap from previous. It overblew it aggressively. And now you see this wick here. It's respected that. With the bonds going higher, you should expect that this is going to go lower because they're inversely correlated. And if we are going to see price continue this rampage to go lower, promoting further bullish price delivery in the foreign currencies and the indices, we should be able to see very easy things like these equal lows here get targeted. Okay, so we don't really have to do too much. We don't have to really, overextend ourselves in terms of what we're looking at here. We do have this here. Got that inversion there. I think this is now justified us putting an inversion there. So we don't want to see it get beyond this. Once it takes this out, let me actually just do this. That's a change in state of delivery. Where the hell is it? The end of it. Oh, whoops. So if we go to the weekly chart, we did have this weekly bullish order block here. So I think trading through this might be high resistance because it is consolidation, but we have that trend line. So that's low resistance for us to get down into that liquidity there, especially if it overall is turning the sentiment bearish. So we'll see what it wants to do in here. If it does choose to change state of delivery, say we gap lower again, I wouldn't be surprised if we do gap lower again, if I'm being honest. Again, we do got to watch the Iran situation that's going on. Yeah, I think instead of that, we're going to do a weekly change in state of delivery there. Let's keep that there. Okay. We mapped out this weekly low. Well, guess what? We now have a new weekly low. Okay, and then a new weekly high. So you want to do this every single week. And now what's in close proximity to this this area where we're at? Well, we mentioned the change in state of delivery there. Okay. So there's that weekly change in state. That's also in itself a weekly low. We have relative equal lows here from 1 week to the next. So that right there is the first and foremost liquidity pool. When price opens up, if it doesn't gap through, that is the clearest, nearest liquidity pool aside from this gap up here. There's a small, yeah, there's a small void right in there. So that's definitely something we got to pay attention to. If it does open up and start aggressively moving higher, that'll be what it reaches for before it looks to try to get down into this. We may open up, gap through, trigger these out, maybe pull back up into this. I think that if we are going to be bearish, it's going to be a little bit much to get up there. You know, we'll see. There's really no sense in not considering the fact that with what we have currently, uh, considering the fact that it could go up there, tag that, then go. I'd prefer that it doesn't do that. But again, if this had full buy side and sell side, it'd be a balanced price range. This is an inefficient piece of price delivery in there. So it's not a true balanced price range. So the risk of it coming up there first before it looks to try to go lower is definitely there. But, you know, we let price speak. And if it chooses to gap through, comes back up, respects this, and then goes, we won't consider it until needed. And then we got, again, the trend line liquidity. We have the lows down here. It's relative equal lows there. So I would definitely like to see if we could take this stuff out. And we also have this bullish order block. So again, bullish order block. We have consolidation. So again, it could be a little bit high resistance to get down there. It may give us a little trouble, but nonetheless, I still think that it's pretty likely, given what the bonds are doing, that we will end up coming down to target the level down here. Okay, so that is what we're going to have mapped out for this asset. I like the slightly relatively equal lows down there. But again, we'll see what happens. So this is going to be my opinion for this asset. Okay, so again, with that being said, that is the completion of the bonds and the yields. So now moving forward, we're going to move on to the DXY. So with what the DXY looks like right now, okay, we had the buy side invalidation set right in there. You notice how price went up one more time last week. Tag this. This is a significantly bearish view, right? What it's doing in here is clearly some of the clearest style of price delivery that encourages this to want to go lower. We can't even send a closure of a body outside of the high up here. It's, you know, work this area, which again, we called when we were down here. If you remember, we talked about this, right? I know Jen remembers when she was here last week. One of my students, she, well, pretty much probably all of you guys on this call right now, you guys know we called this up into this level. We talked about this being a void and why price should get up there. It just goes back to what I said earlier, how ICT concepts helps you understand the why. So hopefully that was a good experience for you guys to bank. Hopefully you guys took copious notes, or at least saved the video where we initially talked about it, and then now the result. Because there is a process to get us up into that. We talked about a lot of stuff, as we always do. So hopefully it all made sense. And this was a mitigation block here. Wait, was it a mitigation block? No. Why did I label that mitigation block? It's wrong. Probably didn't delete it. Oh, wait, no. Right here, this is the mitigation block. High, low, failure swing, breakdown. See how perfect that delivery is to the open price of that candle? Absolutely gorgeous. So we have this low here, high, lower low. So now price is returning into these order blocks. Also a bearish breaker. Okay, so this bearish breaker there. My expectation is going to be to try to see if we can end up eventually getting down into here. Before it gets down there, though, we have a lot of stuff that's got to break through that may cause slow delivery down into that. And it's the summer months. So we'll see what it wants to do with this. Once we get down below this monthly reclaimed fair value gap, which is right here, we should be able to see acceleration, but we have to break through these levels first. Okay. We may just hang around, right? We're in that time of year that would promote that. So the slight inclination that that's going to take place, right? Once you see that, which we are seeing right now, you got to be cautious. If we do break down, right? If we look at this 4-hour chart, if I was to trade this or say this was the NASDAQ, I'd be looking at this level here. In particular, this last down candle here in this accumulation, because I would look at it as accumulation or consolidation, accumulation, smart money reversal, inversion here, obviously. So if it breaks through, you could use that as inversion. But this right here in particular would end up becoming my distribution phase for the market maker sell model, getting us all the way down to the equal lows down there. So we'll see if that is what's going to unfold, but that's going to be what I would like to see. And that's going to be what my perspective is as we look at this, unless, of course, this ends up above there. So let me ask you guys this from last week, just to review, see if you guys were paying attention. What would you classify this buy side liquidity as? High resistance or low resistance? Just let me know in the chat. See if you guys have been paying attention, getting value, or just hanging out like Netflix, which is all right, but you know, I want you to learn. Tony, you're absolutely right. So if we are going to go from this low up to those highs, high resistance. Okay. Why? Because we got buy side, sell side, stop, run, breakdown. This should be a balanced price range. This should be accumulation, manipulation, distribution. We should get a rebalance in here, just like we did here. Right, we finally broke out of that range there. So this should be the true rebalance to redistribution. So again, that just further justifies what my overall perspective is, and we'll see what happens, right? And again, if this ends up above this high and starts racing to the buy side, then of course we'd have to then reevaluate. But you notice this liquidity void in here. What did they do? They offered buy side, sell side, buy side, sell side. It was so inefficient that they just decided to really make sure it was efficient. Everybody got to participate in that level that maybe didn't have a chance to over here. Okay. So again, that high resistance level right there, I'm fairly confident with what we see here in price that we should be able to get continued respect to this level. Okay, so we got an order block. And if you think about this accumulation, manipulation, distribution, rebalance, redistribution, if we were to make this bigger, I want to highlight this once more as well. What do you think's happening in here in this level? If this is a fractal behavior, accumulation, manipulation, distribution, what do you think's happening in here as price, went up and then went lower? What does it look like? Doesn't this look very similar, like a smaller piece, like a fractal idea to this? Right, if we were to go to the 15-minute chart or the 10-minute chart, isn't that same thing happening right there? What's happening? Okay, and then whoops. Isn't that same thing happening here? How about even further, right? How about we go even further, right? What about in here, right? Isn't this accumulation? Price manipulates above that little high and then distributes. Isn't the same thing visibly applicable there as well on that even smaller perspective in the New York session? You want to know something pretty amazing? This kind of goes back to my little indicator right here. Accumulation, manipulation, distribution. I have a little indicator that kind of outlines accumulation, manipulation, distribution. Accumulation, manipulation, distribution, right? Of course, it's not going to be perfect every time, but when it's there and it's obvious, it's going to show it. It's outlining very specific times that lead you to, right, what we're looking to see happen. Accumulation, manipulation, distribution. Okay. But that is a discussion for another day. Okay. So yeah, let me know in the chat if that is helpful. If you guys have known that before or if that's new, I'd like to see where your guys' perspective is at or has been. I mean, I've talked about this stuff before, right? But maybe it went over your head, like many things probably will along the journey. Because when we are at a particular level in our journey and we learn things and we're getting exposed to things, we have a bias of what we're trying to listen in for because of what we think at the moment is important. But then later on, we start to figure out other things are important. So even if they were taught before, you won't remember it because the bias we had at the beginning. But then once it's introduced again, you're like, oh snap, like that makes even more sense. Yeah, Tony, exactly. Everything repeats. Everything is fractal. Everything does what everything does on every single time frame. Right? If I'm on the 1 hour or the daily, it still is going to have the same characteristics when I go look at the perspective of a 10-minute, 15-minute, 1-minute candle, or drop down to the 5-second chart, you'll see a 1-minute power of 3 happening on a 1-minute candle as it forms. And then, of course, all that lower perspective is happening inside of the larger view, right? So that's where the narrative's at. All those other pieces are details showing you what's being created on that larger view. So that's why you always want to trade in line with the overall higher time frame because it's the big picture. Okay. So again, if this does end up getting a little bit more exaggerated to the upside, say we do end up seeing a break above this high, and it does look like it wants to try to target up here. Well, in this case, this accumulation, manipulation, distribution view, especially if the yields start to turn and go higher, will then be justified going the other way if it was to break above fair value in here, which is the midpoint of the accumulation. Okay, so once it breaks back above fair value, if we overtake this high, low, higher high becomes a bullish breaker. And then we'll go from bearish PD arrays respecting it, going lower, to then bullish PD arrays justifying buy side delivery to the high resistance liquidity up here. Just because it's high resistance doesn't mean that it'll always not get targeted, right? Sometimes it will. If it's a very underlying bullish market for whatever asset you're looking at, sometimes it will upset that. And you have to be able to be flexible and not get married to the idea. Let price tell you what it wants to do. Anticipate, predict what you think is going to happen based on your skill set and what you understand about price. But if the market tells you, nah, I don't want to do that, you have to remember that everything has an inverse nature to it. And when price is doing the opposite, say there's a bearish breaker that chooses to do the opposite, well, that bearish breaker becomes a bullish inversion breaker. So you just use that same area that you would use for the short, flipped upside down and go the other way and see if it justifies. And then once it does that, if you're not comfortable engaging in that, you then wait for your model to show up for a continuation as it turns around and goes the other way. So this is what I do when it comes to being flexible. This is how I think about stuff, right? Aside from my depth of knowledge when it comes to how price operates, there's also a layer of flexibility. There's also a layer of opposing view navigation as well. There's tools and tactics that we use, right? And some of those are the inverse nature of every PD array. Intramarket relationships, if they stop agreeing, right? Sometimes we have to adjust, okay? So, yeah, hopefully all this stuff makes sense. Let me see the chat. Okay, no questions. All right. So with that being said, again, we shall see what price wants to do in this. We go to the quarterly perspective real fast. What just happened? So if we go to the quarterly perspective real quick, we do see that we have pretty solid respect in here. So this wick taking out this low, this quarter, if it respects this wick in here, it would go higher. But if we're looking at this quarterly perspective right here, we're looking at the indices trying to go higher, the bonds looking like they want to go higher, the yields looking like they have an interest to possibly go lower or start a move lower. We literally have a bearish breaker in here. Fair value gap, it's clearly respecting the upper portion. We took out quarterly highs right here and rejected. This wick in here, that wick right there, 50%, price couldn't even close above it or even barely get above it. This high is now an intermediate term high. So if this high gets taken, longer term, it'll be bullish. But if it stays intact like it is, it's building the narrative for us to keep going to the downside. Okay, we got a quarterly suspension block in here. And not only that, we have the quarterly wick levels here too. So each one of these levels is a target. If we do see the price is going to go lower, let's actually make this a little more eye friendly. Okay. Okay, so 25% of that wick lines up with these equal lows. One thing I do want to talk about as well, I mentioned before anything takes place. When price came down into this low here, we have a bullish order block and consolidation. Is that high resistance or low resistance? Well, I probably shouldn't have typed this thing out first, but it's high resistance, right? To get down into this. So what did price do? It tagged it and then rejected. What is the concept that I've taught you guys, both in my private group, for those that are in the private group, and those of you that are here on YouTube? What have I called what's happening here? If this does end up going lower, what has this become since it traded into the high resistance? What did it create? What is the term I used or have taught you guys? What kind of liquidity? Right, it's a new thing that we talked about. What is that called? Do you guys remember? If it's going to go lower and it hits a high resistance level and it rejects, but it's still going to go lower, and it takes out a high like this, but it still goes lower, what is that term of this behavior called? Creates deferred liquidity. Great job, Mike. Great job. Is it 2 R's in deferred? I don't fucking know. Let's keep it at 1. I don't know. No, it doesn't look right. Yo, you don't got to be a genius, okay? But yeah, deferred liquidity. That's exactly what it is. Okay, so just to reiterate, deferred liquidity for you. If price trades into high resistance, you don't expect it to just go lower, right? If it does, it's because of a news event, right? But you would expect something like this, okay? It would defer drawing to that liquidity by running up, taking stops real quick, just like it did here, drops down into high resistance. It's a bullish PD array. Ran back up, stopped it out, came back down again, tagged it again, creating what? Failure swing, relative equal lows, turning this level of liquidity from high resistance to low resistance. Okay. Then once it takes this like this, just like it did here, once, twice, it deferred it aggressively here. And now we got a stop run up here, creating now what? High resistance to then target the low resistance potentially, right? Let me actually... shit. Let me actually move this. Appreciate whoever subscribed, by the way. I'm glad you're getting value. Save this diagram. So yeah, let me know in the chat if this stuff makes sense, you guys. You guys still awake? You guys still rocking with me? It's a lot of good stuff that we share on these calls. They're a little bit long. You got to be really, really wanting to learn. But you know, hopefully I keep it engaging enough. Yeah. So with that being said, my overall goal and intention, we do have stop run up there, so it's going to be high resistance if it does get up there. But again, we do still want to see us break down below this. If it gets down below that, again, we have low resistance that's now been created. We have high resistance here above the highs that's clearly rejecting off the top right there, closing below the wicks, closing below this high. Can't even get from this candle, this current candle from Friday, couldn't even get up into that wick. It's rejecting these consecutive up candles. We're starting to show price tipping its hand to us that it wants to go target what it left previously. So again, that's going to be what my overall perspective is. Okay, and we'll see if we can't get price to continue its march down to the sell side. Okay. So yeah, that just about does it for the DXY. So hopefully you guys got value, and we'll move on to the next. Let me know if you guys got any questions, okay? So yeah, as we move on to this asset. Okay, now we're going to the currencies. So if we take our DXY understanding, or overall perspective, being those equal lows potentially being targeted. I mean, when you look at the dollar from a weekly perspective, we got very obvious equal lows. We got stop rate up here. It is relatively equal up there, but it's already done work up there. We also have a bearish order block here, 50%. So, I mean, it just makes sense that, price drop down, high resistance liquidity in here. Price came down, got up above the highs here. This is on a weekly perspective instead of a daily. So you could see all the same stuff happening on the weekly perspective, right? The same stuff we identify on the daily for the daily perspective. You could see it from a weekly perspective, showing very similar characteristics. Drop down into high resistance level. There's a high here. Price came up above that high, tagged it, set equal lows, so low resistance. High resistance turned to low resistance, engineered to then go lower. This goes back to what I was talking about in terms of liquidity as well. I've given you guys tremendous amount of very valuable liquidity navigation and identification understanding for the last, just the last year. I've given you some of the most highly effective different tactics to identify and utilize liquidity, which nobody else talks about. So hopefully you guys have been taking note. It's very, very impactful stuff, you guys. I'm telling you. I'm sure most of you guys know. Just by being here, you see it in action, not just theoretically. We're literally engaging it, showing it constantly, right? So much so it's to the point that it's undeniable for anyone that spends time here, even for 2 weeks. I mean, you see it's very clear. But yeah, so even the dollar on the weekly chart looks like it wants to target those lows. So in that instance, given that that's the case, we have this, which had SMT at the highs up there. Okay. Was it up there? Oh no, it was here that I saw the SMT. Whoops. It was right there where I saw the SMT. For the British pound, for GBPUSD, seems like we just came down to a discount, right? We took stops in here. While it was declining in there, obviously things have changed a little bit. We did have our attention down here with the market maker sell model. But again, if the dollar's going to keep tanking, if the yields are going to keep tanking, if the bonds are going to keep going higher, then we should be able to see this continue. We're also above this weekly fair value gap here from way back. Where was it? I think it was it a weekly? I think I mapped that incorrectly for whatever reason. Must have moved it for whatever reason. Yeah, I don't know why it was moved up. That's weird. But yeah, regardless, we're still above that. We have a quarterly bullish order block as well. Go to the quarterly perspective. Price is inside that quarterly order block. It's not at all violated it. Okay, so we got stop run here, stop run here. We got relative equal highs up here as a deeper layer of liquidity. Okay. So I definitely want to see later on. Obviously, this is pretty far away. One whole quarter, though, I mean, you could see if it gets real aggressive, could get us up there. But we have this wick in here. We definitely got to keep tabs on that. The quadrants in that wick. So if we take this and map that there. Take it back down to the weekly. Clean some of this up real quick. See, I mapped that quarterly wick right there. Wait a minute. Okay. So with that being mapped out like that, let's go back to the weekly chart. We now have extra layers of like levels in price to watch as we get up to this potential main objective along the way to this further level up here if they do choose to really tank the dollar, which is what the expectation is. I want to see if they can get through that. And of course, if this low was to be violated, then again, we just adjust back to what the perspective was here. With all the stuff happening in the world, again, you got to hold on lightly, but I'm highly confident that we will end up seeing price do what we've talked about, just given the depth of analysis we've done and all the different factors. But again, a wrench could be thrown in because Trump tweets something, right? Or the Fed chair says something in the coming days. So we just got to be very, very cautious, right? It is in a range. That's another reason why things could change, right? But we'll see. So far, it looks like we've had a stop run here, stop run here. We take the high up here to the low extreme. Equilibrium. I believe we talked about that recently, how it's at equilibrium. I think we talked about this low to that high. Resting at equilibrium is a problem, right? So with this low taking out this low, these highs up here taking out these highs, that gives you a new dealing range from this low to that high. And even in that dealing range, we're at equilibrium. Okay. So I think we will keep tabs on that. It's good to have that. So EQ. With the fib from here to there. Pretty much the same. So just that little range in there. Little range of equilibrium. Okay. So we'll keep that in mind just as a note. Okay. But we got equilibrium here, equilibrium here. It could hang around, it could bang around, not really try to do much, which it already has done. It's already had a hard time getting through. I mean, you could see like drag that out, right? Both equilibriums, look at how it's using both of them bouncing around. So the things that I believe, let me make this smaller. Move it entirely. So what I believe is going to be very impactful is if we can get above this here for the foreign currencies, specifically GU. This right here is going to have to turn to a bullish inversion. Okay. Because this is a drop lower. If we do end up seeing price go higher, which I mean, look at the target, equal highs, 3 equal highs, dollar going lower, bonds going higher, yields going lower, bullish seasonal influence, bearish for the dollar, right? Bearish seasonal influence for the yields as well, by the way. We got this wick being respected. We have a stop run, rejection block created. Price is respecting this bullish order block. Close on a closing basis. We can't even close inside the order block. Price is now above almost closing entirely above this fair value gap, which once it gets above that, it's fully on, right? The game is going to move straight up to the buy side. We got relative equal highs up here, stop run, accumulation, potential manipulation, distribution getting up to the buy side here. We there was an argument to have been made about the accumulation, manipulation, higher distribution, which we did talk about. Accumulation, manipulation, distribution. If you go back to this week, I talked about how there was a risk of this being a decline in here, right? Trying to get us down below these relative equal lows, which again, this right here is low resistance. Did price treat it as such? Yes. Okay. So one more thing to think about as well. This low and that low, is that high resistance or low resistance? So you have a bullish order block and a stop raid that's closed as a wick and a lower low, and the most recent candle closed above it and started pushing away. And we have relative equal highs up here. Is this high resistance or low resistance for price to want to get down through that? Let me know in the chat. And again, we'll get to indices after we talk about this, for those that maybe are waiting. But all this stuff is useful for every asset, from the tactics to sincerely what's going on in this relative to the indices. Every single asset impacts the other. So this low right here and this low right here. It's a low that gets ran out and then price runs up. Right? Is this high resistance or low resistance? So remember, go get my drawing tool. Okay, so if this is a high resistance signature and this is a low resistance signature, because it has a failure swing, meaning that the low has not been tagged yet, while this one has been tagged. With that being said, this low being taken out by this low actually creates high resistance because it already took the low out, and it's proved concept by closing above aggressively, unwilling to get down through this. And this is also at the weekly bullish fair value gap, or inverted weekly fair value gap. Okay, it's from a while back. Okay. So a low that's purged like this, to keep it simple, like we talked about last week, a low that's purged, if it's going to come back down into it, it's high resistance. Could be high resistance. Why? Because it already did work there. Versus something that maybe set a failure swing in here. Let's go look at the EU. Yeah, see, the EU created a failure swing. So if this goes lower, say it does give it up and goes lower and looks to target this, EU is going to be the low resistance delivery versus the GBP. Does that make sense? So this right here is high resistance, especially if it gets above this fair value gap. We'll have a bullish order block, a stop run that was purged and pushed aggressively away from it. Okay, of course, if you're using this low and this low, right, if it was to break down through that, it'd be a different story if the overall underlying sentiment was bearish, but it's not, right, given the other assets, right? And if it breaks through this level, then this low becomes low resistance. But because we have this stop run here, we have to wait for that to be taken out before this low becomes low resistance. Okay, and then this would be equal lows down there. But again, this is all high resistance here, right? And so it's having a hard time getting through that. Aside from that, the other assets support buy-side delivery. So the underlying context as far as why this low and this low should be left alone is just as significant as identifying whether this is high or low resistance, right? Whether it's high or low resistance from a pattern perspective is one thing. The context on the back end with these other things that we add onto it adds another layer of effectiveness, right? But again, this here, because it's a stop run, to keep it simple, your school of thought should be stop runs, basically a breaker. If I'm looking for it to take the high out of a breaker, like this, for example, right? Low, high, lower, low. If I'm expecting this to be taken out, right? Say it broke down below the low and then immediately tried to get back above it. That's going to be high resistance delivery because it already took highs out. Versus if this was a failure swing, aka a mitigation block, if it takes the low out and then looks to rally up against it, and say there's a bigger perspective that it's going to target, it should be low resistance to get through that failure swing, right? So failure swing equals low resistance if it's going to take it out. Stop run, basically a breaker that fails to deliver, as in this case, a bearish breaker, and chooses to try to target the highs, many times it's high resistance. Most of the time, it's high resistance. Okay? Especially if it drops down, and this was a breaker that gets utilized. If it comes back into it, that's where deferred liquidity comes into play, right? Because this is high resistance. It has to come up, right? Tag that, right? Create the failure swing logic here. That then turns it from high resistance to low resistance. Okay. And then it's afforded the opportunity to then fly like we like to see it do. But again, because of the underlying context, because of what we believe is going to happen with this and this high up here, this should act as high resistance liquidity. It should never even come back down there. And again, if it does, that's our trigger to then think, okay, we got these equal lows and we can easily adjust and then get back in line with that. But my intention, overall perspective that I'm going to be solidified in is trying to see if we can get up above here. Again, we are in a large range, so it could just continue to bang around. And it's the summer months. So we can't discount the fact that that is also something hanging over us. Not something we're going to be fearful of. You know, we're going to stick to one side or another as we always do, but we always have a contingency plan. But again, hopefully all of what I just described makes sense. Let me know in the chat if that makes sense. But again, the failure swing, if it's going to go down into that, it's much more high resistance than it would be if it's a failure. Okay. Wait, did I just say failure swing? A stop run, right? Like this, price that takes out liquidity is much more high resistance to trade into than it is with a failure swing, right? If this low did not take this low out and it just came down into it slightly, failing to take out that low, and then starts to deliver, it'd be low resistance in that case. This is high resistance. Plus the other factors too, where this is happening at. What else supports that being high resistance? The fact that this is a PD array from previous on the higher time frame that's being respected numerous times. The fact that we're damn near inverting this fair value gap. Once it closes above it, that's fully engaged as an inversion. We do already see early signs of that with the midpoint of this fair value gap being respected on a closing basis. Can't even spend a lot of time below it. And the bullish order block, right? And the fact that this is all high resistance in here as well. And the fact that most of the other assets support that we're going to be bullish, dollar going lower, right? If dollar is going to target these equal lows we talked about, we are not going to go against that, especially when it comes to currencies. They are perfectly reverse correlated. So if the dollar is bearish, you expect that the other currencies are going to go higher. So if this drops aggressively and does what we say it's going to do to target these equal lows here, this is going to go higher. And a high resistance level like this, when we identify it with these things on the back end, it becomes much, much more high probability that we have probabilities in our favor, right? For what we've talked about to unfold. Okay, so let me know in the chat if all this stuff makes sense. Before I move on, I want to make sure that makes sense. I'm assuming that those of you that did say this was low resistance, you are using this low and this low, but I was referring to this low and that low. Would that be a correct statement for those of you that said low resistance when I talked about this? Were you thinking that I talked about this low and that low? Just say yes or no in the chat real quick. I want to see where that disconnect was at. Yeah, okay, yeah, that makes more sense. Yeah, because the stop run is there, that was what I was referring to right there. This low and that low, if that's what we were referring to, right, and price breaks down, because there's a high resistance level in here, it's going to have to break this low before I classify that as low resistance. That's something I haven't taught to you guys yet, but I guess this is a good opportunity to mention it, right? So if there's a high resistance level with this failure swing, you got to wait for that high resistance to be purged before you can classify this low, for example, as a low resistance level. It's more of an advanced perspective. That's why I haven't talked about it, but hopefully that was easy enough to understand. And if you guys have been seeing like there's a flash going on, I got like 100 people texting me right now, like nonstop. Like, dude, please relax. Every single weekend, please relax. Please. Like, if you're watching, please. But yeah. So again, hopefully that stuff made sense. But yeah, this is our perspective for GU. Okay. Can actually one more thing that I want to do. If this gets above this, what else can you guys anticipate that I'm gonna mention about this? Right? If it's gonna go up higher to this level, what else should you expect that I'm gonna talk about or mention? Right? If we're gonna go higher, what haven't I mentioned? Excuse me. What haven't I mentioned that is reasonable when we're looking for price to go lower, then go higher? Right? What else haven't I mentioned? For those, oh my god, dude, I need to put this crap over here. Oh, damn, we're gonna have a freaking seizure. It's flashing so much. It's crazy, dude. People don't know how to just relax for a second. Like, so yeah, when price goes lower to go higher, if we're expecting this buy side delivery, aside from everything that we've just talked about, what is one thing that's missing that I haven't mentioned? Let me know in the chat. Yes, sir, Mike. Mike, you prove all the time that you are super locked in all the time. It's amazing. Absolutely. Market maker buy model. Okay. And then when we drop down, say, to the 1 hour chart, to get even closer to where that market maker buy model will be at in terms of mapping out what's going on, when this gets up beyond this level here, okay, this will be our distribution phase. If it gets above this, right, you can kind of use the highest portion. And then once it breaks beyond that, okay, this should be used as support. This little area in price in here should be used as support. Okay. So that last up delivery prior to the down move, once it breaks beyond that, triggers it as distribution. That should be used as support. And then once it tags this upper level, this level should also be used as support. So it should look something similar to this once we get up there. All right, once it gets up beyond this level here, should be able to get price to reject into it like this. And then once it gets beyond that, should be able to see something like this. That should leave behind a BPR. All of this should be a BPR as well. It's ironic too, because watch what I'm going to point out as well. Okay, so this is the larger buy model that we could frame out with that bigger perspective. Hopefully it jumped off the chart at you once I dropped this lower like this, because we see a very similar thing, right? Currently taking place, right? Isn't this in itself a market maker buy model too? Smart money reversal at the equal lows here. That's a protected low in there. Stop run below that low, failure swing, inversion, break above. We got first stage distribution. And now we got second stage right here. So this, we should not see if this is going to be trustworthy to go higher. You know, from this perspective, it should continue to hold price in that level. Okay. So we should not see price get down through that too aggressively. If you zoom in a little bit as well, I mean, you could see it even more clear like this. Okay. Right. So this right here should act as a BPR. We have a low, high failure swing. That's a mitigation block. Respected it. All of this at that point should be a balanced price range. After a stop run, it was. See how it never even attempted to get down into that? Price shot up, came back down this low to that high. This is optimal trade entry. ICT's first model that he released publicly. We got a breaker here, high, low, higher, high. Entry right up in there. Price never closed outside of the breaker. It's also a bullish order block. Also inverted fair value gap. Also, if we went to the 5-minute chart, let's see, so 10 a.m. So this is that decline to rally. Yeah, that's the decline to rally. Okay, so we got decline to rally. Okay, if we break it down even further, whoops. Got accumulation, smart money reversal. Okay, smart money reversal, distribution, second stage distribution, equal highs, market maker buy model. Price went lower to go higher. This is the type of stuff that I say for my private group most of the time, but hey, why not? Y'all are part of the family too, right? Beautiful. Right? So think about what we just did, right? We just broke down a larger market maker model to a smaller, right? This larger one to a smaller one, right? To an even smaller one inside here. And you can go even further. We can go to an even bigger time frame and get the even bigger one, right? Or go even lower and get the even smaller ones. And it's just all over the place. It's everywhere. But again, this is my perspective. Do you guys have any questions about it? We talked about a lot just in this asset. There's a lot that can be taken away from any one asset, which you don't have to have a lot at first, but I mean, you want to work towards that. Hopefully by now you guys know why too. Lower, higher, above 50%. We're confirming market maker buy model. Yep. So waiting is the main thing. Yeah. Yeah, Tony, waiting is the name of the game. Your goal is not to take more trades. Your goal is to know when to not take a trade and when the good trades are forming and where they form and why. Right? Why is it trustworthy? And hopefully these calls you guys spend time listening to really gets you to understand the why. Okay. So yeah, this is my perspective on the currencies. Right, we may see a very similar thing unfold here as well in the euro. We don't really have to talk much about it. It's pretty much the same, right? Yeah, second stage is amazing, dude. You have so much information on the back end, and if you could just justify with the higher time frame, I mean, bro, you just got to wait for those. Just wait for them. It's low resistance liquidity runs in the second stage, right? Low resistance liquidity run forms at the second stage distribution, like 90% of the time. You want some of the highest probability trades? Map out market maker models over 1,000 times. Take as many screenshots as you can. Identify that second stage. And whenever you see it in that second stage, right? If you could frame it out and it's there, make a decision, right? Not because I told you, but because you decided and trust it from your back testing, right? And you know it works, right? It's undeniable that it works. So just couple that with a PD array that you like, order block for value gap, doesn't matter. Whatever is there, right? You then go ahead and make a decision on it. That's why we never pick lows or tops, because you can get beat up. You might as well just wait. Give up the best of the best, sniper entry at the very, very top of something for a later sniper entry. Because sniper entries are happening all over. Like, this may have been the sniper entry for the smart money reversal in this time frame, but this opportunity is the sniper entry for this market maker buy model inside the bigger one, right? And then there's another one probably even lower that's still a sniper entry with all the back end timeframes right here supporting you. So just because you miss one sniper entry doesn't mean that there's not another one happening simultaneously. You just have to know how to navigate the timeframes. And that comes with time, honestly. It's definitely a thing that comes with time, but hopefully these calls help amplify that time or shorten it for you a little bit, because I'm pulling you right to the brass tacks of things, right? Like right to the heart of the matter, and then giving you any supportive ideas that come as a result. But yeah, so that is my perspective for the currencies. Let's go ahead and paste that one in as well. Okay. Okay, and now we will move on to the wonderful NASDAQ, or the foreign currencies. Oh, yeah. I was doing a bunch of stock analysis the other day. Damn, looks awfully similar, huh? Looks very, very similar, doesn't it? Wow. It's almost like any asset you trade can use this process, even stocks. Wow, fascinating. Yeah, that's a conversation for another day, though. So yeah, we will now look at. I mean, there's not a lot to look at, really. Everything is just parabolic to the upside, like just buy, like that. That's it, literally. From the low that we picked this year and last year to where we're at. I mean, that is ridiculous. We are due for such a heavy correction. It is unbelievable. But does that mean it's going to happen soon? Who knows? We're going to have to see what happens. There's a lot of shifting taking place. The world is changing beneath our feet. Like things in 5 years are going to be totally, totally different. Elon Musk said that over 100 million robots are going to be created by 2031. Like what? He said in the next 5 years. Is that 26? Yeah, like 2030 ish. 100 million robots, like humanoid robots. 5 years is not that far away. So what does that mean for society? What does that mean for jobs, entry jobs, certain jobs? Low end jobs that are like for emergencies. What does it mean for that? What does it mean for engineers? I saw something that was pretty Pretty shocking, kind of justifying what's happening nowadays. But here, we'll get through this real quick and then I'll show you after. So we've had this run lower. We created what? High resistance. Price came up, respected the order block. This candle here's justified that the S&P was going to go higher. Right? This candle here, right, justified that the NASDAQ would continue to go higher. Okay. Price came up, tagged that rejection block. Price came lower, closed, and then we gapped up, blew out the high. Last week came down, swept liquidity here. It's just continued buy side. There's no reason to take a short at all. Unless you're taking short term to target a PD array to then go higher, like this candle here going lower into that gap, you could frame a short on that. I talked about shorts going into that, right, with my private group. But unless that's the nature of what you're doing in terms of framing shorts, I do not recommend you take any shorts. I don't recommend you do anything, right? Because I'm not a financial advisor. But at the same time, if I'm going to short, it's going to be based on the premise like this high needs to go into this wick midpoint so we could continue to go to the buy side. That's going to be the gist of what I do when it comes to trying to take a short position. It's not going to be we're going to get down to here because there's no guarantee that that's going to happen. And there's a lot of things telling us that that's not going to happen, like the bonds and yields. Okay, so it's ill-advised to try to pick a top and go lower. Keep going to the buy side. That's my perspective, right? And honestly, that perspective has paid very well, like since the end of March, right? I mean, it's pretty spectacular. How many down close candles can you even see relative to the up candles? There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32 up candles with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 down candles. That's a 3-to-1, right? Like a third of the candles in this situation. Out of 42 candles, only 10 were bearish. Does that really tell you that you should be picking tops or selling short aggressively? I don't think so. It's ill-advised. It's irresponsible. If you're especially if you're not used to counter trend trading yet, which I teach. Hopefully you guys understand that a little bit more every day. But there's really just no reason to go against the grain. The waves, the ocean's current right now going bullish is absolutely unbearable, unforgiving, relentless. So, people that are trying to force shorts that don't know what they're talking about, I mean, it's their account, right? Let them fund the other side of our trades, right? Because I'm buying, right? Long term and short term. So maybe not so much buying right now until we get a pullback on some stocks, but earnings are being clapped. Nvidia is making $91 billion of earnings, like insanity, crushing expectations. SpaceX is going to IPO soon. I mean, there's so much stuff going on. We're going into a crazy world. Robots and space travel and AI. Pretty incredible. Pretty incredible. So yeah. With the NASDAQ dropping lower, respecting this, the most I would be able to anticipate this going lower is simply to get this low. This is a BPR here. I talked about this idea here too, the inverse rejection block idea, because rejection block has a counter I guess, a flipped nature to it too, inverse. So if an order block or a rejection block or a breaker or fair value gap or any other PD array is violated to the upside, it has an inverse nature to it. So if the trend's bullish and you thought it was going to be bearish, once it invalidates that bearish PD array, when it returns into that level, it's inverse and it's a model to go the other way. So because of the inverse nature of every PD array, if you think about it, you really have two models by default, no matter what PD array you use, because they all have inverse natures to them. So, something to think about. If you have like 4 or 5 models, that basically means you have like 10, right? You just have to practice it from that perspective. You don't need to do both, right? But it opens the door for more opportunity, more reason why it's irrational to think missing a move is a problem. If you miss a move, just think the inverse. If it's justified, right? But yeah, I think that this is going to continue. We came down, tagged this level, rallied. There's SMT as well. This is a function of SMT right here. PD array that shows on all the three averages, but 1 or 2 of them does not get into it. That's heavy bullishness. We can't even get down and fulfill the relationship. It's just rapid. And this is caused by the stocks in the NASDAQ, NVIDIA, right? All the AI stuff, all the tech sector stuff. Space, I think, is going to be part of the NASDAQ too when the IPO comes out. We'll see what happens. The new IPO, given how large it is, $1.7 trillion valuation. I mean, dude, people are piling on. I'm not. I'm dealing with the pick and shovel ideas to lessen the exposure. And then when we can get a pullback, I don't know how much it's going to be to buy the SpaceX IPO. We'll talk about that too at some point. Um, but yeah, I think I'm going to go with ETFs, baskets of SpaceX stocks that are affected by SpaceX and SpaceX exposure together, just to lessen the volatility. And then, of course, once SpaceX becomes more established, I don't think that $18 billion in profit justifies the $1.7 trillion valuation. They should have at least $100 billion in profit. So we need that to kind of shrink a little bit, valuation compared to the revenue they make, right? There's other companies that are pick and shovels, basically providers for SpaceX that give them the things that help them operate, like Rocket Lab, like Planet Labs, like what else? There's a handful of others. There's ETFs for those of you that might want to look into it. Mars, UFO, and NASA. All 3 of those are going to have SpaceX exposure, but also pick and shovel ideas. Everything that surrounds SpaceX. If SpaceX does well, all these other companies are going to have large returns as well and growth. So that's how you want to look at new technologies, new things. You want to look at the things around it that affect it, and then what assets you can get relative to that main asset. That's how I see things. Like with AI, they need data memory, they need cooling, they need all kinds of stuff, right? The data centers, they need uh, anything that has to do with the compute, right? The speed, the data, the just everything that surrounds it, right? There big companies that, well, sometimes small companies that are going to turn big, but then there's big companies in that realm of stuff as well, which is a safer bet because they're providing specific things to help the bigger name run. So there's big opportunity in all asset classes, but specifically right now, space and AI. If you don't want to invest in the main stock because it's too expensive, you can consider thinking about the other ones too. And I'm going to be trading options on those types of plays as well, because I mean, it is what it is. Like, we understand this, right? So yeah, all of those things doing very well because they're exposed to the NASDAQ or on the NASDAQ. That's going to have an impact on this as well. So SpaceX, Anthropic, OpenAI, these are some things that are going to go public soon in the month of June. So well, maybe not some of the AI companies. I think they're still kind of lagging, but you know, for all of it, SpaceX, all the companies around them to AI, uh, the cooling is a very big problem, and water. People don't realize that water is going to become scarce because tens of thousands of gallons is needed to cool these quantum computer ideas, right? These data centers, they need cooling, liquid cooling. Water companies that provide this stuff, that have rights to water, those companies are going to probably do extremely well. So that's another area in this sphere of influence that I'm trying to watch, and try to see if I can catch some options on, which is going to be pretty incredible. Because again, all we do is take what we do here on all the assets that we've just discussed that we continuously end up being correct on long term and short term, just apply it to the options idea. Obviously, consider the different rules with options and different things like the strike price, the premiums, and some of the other things that are very particular to options, like timing, right? You got to be able to time it properly. It's going to get from here to there in this amount of time. Well, the news is going to be a big factor in that too. Whether the company's doing good, right? The leadership, how much momentum they have, right? Do they have a special thing that makes them better? Is there earnings that they're very close to that are going to potentially do well? Earnings will shoot the stock up too because they're doing well, like Nvidia. Sometimes it'll drop. I think Nvidia dropped when it released the earnings, but nonetheless, long term, it's going to go higher. It's still going higher. So yeah, my objective is to see if we can see if this low can be respected. The wick midpoint, I wouldn't be surprised if it tries to get down there, but then again, we have this wick that we got to get through. So if it gets through this wick, my intention will be to target this wick. If we break this wick, my intention will be the new week opening gap. But as long as this high to that low's 50% level is not violated, we will still be en route to keep going higher. Okay. And again, if this midpoint gets violated, we just look for second stage in a large market maker sell model. But man, oh man, I would not bet against this, especially with Trump in office. He is very, very good for the economy for whatever reason. It's a businessman for you, though. Love or hate him, this country has built a tremendous amount of profits, more so than the last 5 years. The last three presidents before him, he has set records financially. That's why everything that's happening, even through a war, the stock market is accelerating. I think there's been like $4 trillion that's flooded into the US markets since Trump has become president. That's insanity. That's more than all three of the previous presidents combined. Like, in terms of influence, like, love it or hate it, there's money to be made, regardless of what you think about it. So don't let emotions about and how you think about politics allow you to miss opportunities of a lifetime. We'll talk about XRP2 soon. Big developments have happened. So, but yeah, this is my opinion overall for the NASDAQ. Do you guys have any questions? Damn, it's already been almost 3 hours. Damn it. A little bit longer than I wanted to take on just this part. But yeah, pretty much covered everything I wanted to cover, aside from some topics. I think we can get to that at some point, or maybe I'll make a pre-recorded video. But yeah, do you guys have any questions about anything? Let me know. Want to make sure that when you guys hop off this, you guys are content. You guys learn some stuff. But yeah, I'm here if you guys got questions. You know what I mean? So definitely take advantage of it. throw one in the chat if you guys have no questions. If you have a question, let me know now. But if you come up with a question later on, you can obviously send me a DM and whatnot. If you're in the private group, just let me know as well. We can set something up. But those of you here on YouTube, shoot me a DM if you have a question. But I'm gonna assume that everything is solid then. I think I did a reasonably good job breaking stuff down. Hopefully you guys think so. But yeah. So with that being said, again, we don't really have to go much further to the down or to the lower time frames. It's not the whole purpose of this call. The call purpose is to knock out all those different assets. Obviously, I added a couple of other things as well. But we talked about a lot of stuff. So hopefully you guys were able to pick up those gems. Hopefully you took notes. If you showed up a little bit late, don't discount the beginning stages of this video. I talked about so much stuff that you're not going to want to miss. So I highly advise you to watch the beginning portion of it. And yeah. So with that being said, God bless you guys. Again, if you guys have any questions, let me know. I will be happy to answer any questions you guys have. And again, if you guys showed up late, you have to go watch the beginning of the video. This session had so many things that I know for a fact will change the way you view things. And if you doubt it, it's unfortunate because you're going to miss out on something very good. Or if you just don't do it, you're going to be missing out on something very, very good that most people don't talk about. And it's for free. It's here publicly. I do the same stuff all the time, right? But a lot of stuff got amplified today, as I said it would. So yeah. With that being said, I won't keep you guys much longer. Let me see the chat. Yeah, no worries, Tony. Yeah, Tony, I totally agree. It's funny you just said that. It's like we're thinking about the same stuff. We're thinking the same way, bro. So yeah. If you guys got questions, let me know. God bless y'all. Hopefully you have a good rest of your weekend. We'll be live again here on YouTube on Tuesday. And then, of course, Sunday and whatnot as well. I will have the private group open up for 1 week every single month until the end of the year. So in the middle portion of this month, let's see, pull up the calendar. So not this week, but next week, either the 8th or the 15th, we'll be live publicly every single day. And honestly, I'm probably just going to hop on YouTube to do it, right? I'll just hop on YouTube. Might as well. So yeah. So that's my gift to you. All of you guys that appreciate what I do and lend me your ear. Again, hopefully you guys get value. But keep that in mind, the 8th or the 15th, right? One of those weeks. I think I'm going to do it on the 8th, depending on what price looks like. But we may push it one more week. Depends on what price looks like, because I want to get you in the best conditions. But yeah, look forward to that. Again, if you guys have any questions, let me know. Appreciate your time. God bless every one of you. Thank you for the love and support you guys have shown me recently. Don't forget to like the video, subscribe to the channel. I probably should have said that earlier because I know people forget, but it does a lot for me to be able to reach other people. It shows me that you like the content, shows me that I should keep doing this and not just be private with my private group again. So yeah, thank you in advance for those of you that go ahead and do that. And again, if you show up late, watch the beginning of the video, right? And then let me know if you guys have any questions, okay? So yeah, with that being said, hopefully you guys have a good rest of your weekend, and I will catch you beautiful people in my private group bright and early tomorrow. And those of you here on YouTube, I will catch you on Tuesday. So yeah, that being said, have a good rest of your weekend, you guys.